Alright, welcome back. This is Lyrics Lab 8 in Business 353, and here we're dealing with a situation where we have an investment in an associate, so we're using the equity method. And we're given a bunch of information about an acquisition. We bought 36% of their 210,000 shares at $15 per share. We have some assets which are not subject to depreciation. Fair value and carrying amount are the same. Good job, accountants. So there's no difference there. Then there are some where there's a slight error, slight difference, holding gain, if you will. 1272 minus 1263, so we've made $9,000 of unrecorded fair value increments on these assets which are subject to depreciation. Of course, those are the ones that we have to depreciate extra. So we paid 1272, they paid 1263. We have to depreciate the higher number, not the lower number. The liabilities are the same, fair value and carrying amount are the same. So once again, good job, accountants. We have net income or loss. This is for the whole year, and of course we only owned it for a little while. We bought it on October the 1st, 2015, and the year end is December 31st, 2015. So, first job, calculate the assumed goodwill. So let's do that with a spreadsheet. Let me just scroll up just a little bit here, and I've taken the liberty of doing a couple of calculations for us, and here they are. And let's just drop that down to the bottom here, and whoops, we need up there. Alright, so with all of the information we're given here, we can calculate the amount of goodwill. We're using the same format as we did for the previous question. Actually, we're using the same spreadsheet, but don't tell anybody that. So, 100% of the assets, and we bought 36% of them. So, we have a little work to do. And so, we bought for $15 each, 210,000 shares, but we only bought 36,000, or 36% of them. So what we paid for our share, our 36%, was $1,134,000. Now they're identifiable assets. We bought some assets not subject to depreciation, plus some assets subject to depreciation, minus some liabilities, works out to $1,422,000. That's what the whole company is worth. Our share is 36% of that, so you can see 36%. Let's double click. You can see that 136% of 1,422,000. Alright, so we take what we paid minus what we can identify as stuff we paid for, and we paid a bunch extra. So we paid $622,080 for stuff we couldn't identify, but we really like the stuff that we couldn't identify, and so we're willing to pay for it. Okay, so we're willing to pay an extra $622,080 for this unidentified goodwill stuff, but then we have a few more things to think about. These assets we paid extra for, the fair value is $1,272,000 and carrying value is $1,263,000. So we have an extra $9,000 worth of assets at the price we paid for them, as opposed to the price that Dilex paid for them back in the day. And of course we own 36% of that, so that's $3,240,000. So you can see 36% of that number. And then we calculate our share. Whoops, don't do that. 3240 is the amount of the fair value increment, and it tells us up here that there's a 5-year remaining life, so we take that 3240 and multiply by 1 year out of 5. 648 is the total annual depreciation. Of course, we didn't have it for a whole year. We only had it for 3 months because we bought it on October the 1st, 2015. And so we need 3 months out of the 12 months times that number. That's the amount of the adjustment. Now you'll see in part B there it says calculate the annual depreciation. Yeah, I got caught with that one the first time I went through this one. That question is asking for the 648, and the 162 of course is the amount of the journal entry later. So with all of that in mind, we will once again go back to lyrics, full-size lyrics, and we'll plug in some of these numbers. First of all, let's plug in the 622 while we're here. 622,080. Okay, that's good. And then the annual depreciation of excess payments for capital assets. That is what we've calculated as 648. And then we're supposed to do some journal entries. So we'll do those journal entries in full scale lyrics. And here we are back. Here we are back to full scale lyrics. The first transaction is the one on October the 1st. We bought some stuff. We bought some investment in associates. I don't know why that went down there. Put it back up there where it belongs. We paid $15 a share times 210,000 shares times 36% of them. 1,134,000. And of course that's the amount of cash we paid. So let's stick some cash over here. There we go. And this is the purchase amount. Then a few things happened on the 31st of December. We got the financial statements from our associates, and they told us, hey, we went deeply in the hole. And so here's your share. And actually, I think we don't have that. It's going to go down in value, so of course we put it in the wrong place too. So let's erase that. Okay, so how much did it go in the hole? Well, sadly, we went in the hole 549,000, and we owe 36% of that. So 549. That doesn't seem right. 36 times 549. We own 36% of the company, and they lost $549,000. Okay, something's not making a lot of sense for me here. Just a second, let me think about this. Alright, I figured out what we're missing there. Okay. We haven't owned this share for the whole year, so we're not responsible for all of that. We've only had it since October. So October, November, December, 3 months. 49,410. Of course, that's investment loss. Investment loss right there. For the same amount, 49,400. So we can write that in here. Share in associates loss. Bad dues. Okay, what else happened on the 31st? Well, we got some money. So it's always good to get cash. We got some cash. How much cash? We got 36% of their dividend, which they paid on December 31st of $67,000. So that's how much cash. And that decreases our investment in the associates. So this one, so this investment loss decreased our investment in the associates, as did this one, because we get paid, we're getting paid back our purchase price because we lost money. We didn't actually make any money in the interim. So dividend received. There we go. And then on the 31st of December, what else happened? Well, we recorded the depreciation. So the depreciation amount is going to be an investment. One more investment loss. Boy, this investment's turning out to be quite a dog so far. It's a good thing we got all that goodwill that we paid for. Alright, so the amount of the investment income or loss is 648, which we wrote up there. But of course, we only been in the ownership position for those assets 3 months. So 162 and 162. And let's make a description so the lyrics doesn't give us a bunch of grief. Adjustment for depreciation. And that's all there is to it. Let's see what lyrics thought of all of this. Do we need to show you any calculations? Hopefully you can scroll back and see the calculation of the goodwill. Let's see what they have to say. Likes the goodwill, likes the depreciation annual number, likes all our journal entries. Our answer is completely correct. We're done.